See the chief economist there, Max, is with you or near you in New York. Max, this is an interesting listing right now, or an interesting IPO filing, because it's because of the Jobs Act. We haven't seen the sort of public iterations that used to be quite common when companies would go public with all their SEC filings. We're going to see that with Alibaba, including this new filing today.
Yeah, well, Alibaba is, for multiple reasons, not eligible to come in under the Jobs Act, more than $1 billion revenue, offshore, et cetera. I do think it's important. I think there's a lot of symbolism, and I think the appearance and the marketing has always been important to Alibaba. Again, they make an awful lot of their money pushing ads through the kind of platform there on e-commerce, not just the e-commerce, so they're pretty sensitive to the importance of publicity. I think it's a symbolic sign of being major and being a global player to be on the NYSE, and I do still think we see a bit of a hangover shadow from the Facebook misadventure.
Yeah, that's interesting. Julie, let me ask you about that. I mean, is in terms of the Facebook adventure from, what it was almost 2 years ago now with that IPO, the New York Stock Exchange is kind of surprising to see them getting so many technology listings.
I mean, in talking to people ahead of the choice of where to list here, they really said in terms of the services that the two exchanges offer, there's not necessarily substantial differences between the two, so it really does come down to reputation and status and where you want to list. The NASDAQ, of course, had historically been that sort of tech place to list, but there is definitely something to be said for the Facebook effect. In addition to that, the New York Stock Exchange does have history on its side, and if Alibaba was looking for sort of the old school, traditional prestige place to list in the United States, I guess perhaps that could have been one of the elements that put them over the edge towards that side.
Max, in terms of the business for Alibaba, what kind of things really jump out at you?
Well, I mean, I think in terms of just finishing up on this, part of the reason I think we're seeing some of the big tech guys go to NYSE is because how long companies stay private in tech land and how big they are when they come public has also fundamentally changed. So when guys are making it to the IPO stage in the tech world, they've been private for 8, 10, 15 years. They're enormous with multi-billion-dollar revenue streams in many cases. So I think that's part of the reason we're seeing the NASDAQ. What we're going to look for Alibaba is that it keeps up its breakneck pace of growing both top-line revenue and keeping what are some of best-in-class margins, which are high margins even for the SaaS space, which is part of the reason we expect Alibaba to come public at or above $155 billion in sort of its IPO cover price valuation.
Max, do the governance concerns concern you? The Alibaba spin meisters are always calling me up after the show trying to convince me that the fact that they're a Cayman Islands company managed by a Hong Kong partnership managed by, that it's not just a straight listing like you'd see with a U.S. company shouldn't be a big deal. What do you think?
Well, obviously, it is a big deal. People should pay attention to it. The VIE structure, or variable interest entity, which has been used by a lot of the major Chinese listings, most recently Weibo or JD, has to do with the ability of foreign nationals to own Chinese companies, which they're not able to do. So we do see some kind of fancy footwork. I do think that really is an issue that demands some kind of a small discount. On the other hand, I think that hasn't been a problem in the past. And obviously, if it becomes a major problem, that will mean that the Chinese government is having a radical change of course in terms of how it wants its economy to interface with the global economy. So while I think it's an issue, it deserves some attention, I'm not sure it would be front and center in my valuation.
Julie, let me ask you, Warren Buffett has this great line that you can only tell who's swimming naked when the tide goes out. The market's going straight up right now, so people tend to not care about these issues. But do you get a sense that people in New York or people who might be trading the stock are concerned about those issues?
It doesn't seem like they are at the present time. You also think about sort of the formula that we have seen for recent tech IPOs and the appetite for recent anything having to do with social or internet. As you know, the demand has generally been strong. So pair that with a company that actually is, as far as we can tell, making a lot of money. You've got to imagine that the demand is going to be high for something like this, and that seems to be borne out by what we're hearing from people who might invest in it.
Max, let me ask you, for Bloomberg West, we rarely talk about stocks because I don't really care about stocks, but I really do care about the businesses. But as you mentioned, there's this prestige issue, the notion that it can sort of translate into better business. Is that the case for consumer-facing, indeed a Chinese consumer-facing company like Alibaba? Does the business get changed by being public?
Yeah, I do think it does a little bit. If nothing else, look, Alibaba is interested in coming to the United States, and before it really rolls out its e-commerce platform, it's going to roll out consciousness of the name through a big IPO. It wants to be prestigious. It wants to be seen as legitimate. Senior management and the bankers are well aware that there are some particular fears that attach to Chinese names and to the variable interest entity and other sort of factors here. And having the most white shoe, white glove experience and getting the best name positioning is quite reasonably a major concern for all Chinese firms, particularly leading firms like Alibaba. So great question. I have to agree with you there.